everybody, welcome along to this Thursday afternoon market recap. Another very healthy session worth of trade. All three markets continuing to the upside. In fact, the Nasdaq almost hit our target up here at 8,900 points. Again, that magnet, so to speak, if I can just draw a very rough magnet, is still pulling not only the Nasdaq, but in this particular instance, up to 9,000. We've got that radioactive, right, box up here whereby this is the danger zone whereby we expect the Nasdaq to essentially stop, slow down, if not set up some form of an intermediate reversal. We are getting very close to that. Today we closed at 8,887 points. Again, we are a stone's throw away of hitting our measured move target from that symmetrical triangle, taking us all the way back to the October breakout, which occurred, if I can color coordinate this, all the way back over here. So again, this is the first measured move projection from the breakout of this symmetrical triangle to take us up to 8,900. Now, just to repeat myself once again, it's probably not going to slow down on the penny at 8,900. When you get very close to these big round numbers, generally the market will pull. It'll pull all the way up. It'll tag it, and that is generally the resistance area whereby we do definitively slow down. So again, taking you back to some of the different types of analysis, or at least applications of Dow theory to the markets itself, there is a very high probability that we are going to move into an intermediate correction when the Nasdaq comes on up and it tags 9,000 points. So again, as I've been speaking about over the past number of weeks, the ADX is very much so pushing back on up to historically high levels. We've been intertwining this analysis with our projected measured move, again, that pseudo 9,000 target, but this has turned up very, very quickly. Since we saw it turn down and reset moving into the first couple of sessions of December, the market has been on an absolute rip. That has continued all the way through today's session, and as such, this is the biggest warning signal that I'm going to leave you with in this last public recording for the calendar year of 2019. This is it for those of you who have listened so far or through to this point of the video. I'm going to intertwine some pieces of sort of housekeeping that I need to at least update you on before the end of this particular video, right? But one of the major points, ADX, watch for it. When this turns down, and I assume it's going to turn down somewhere between 8,900 and 9,000 points on the composite index, that is going to be your opportunity to sell out or to close out of a portion of your Q positions if you haven't already done so. It's going to be an opportunity also to close out of the SPY positions or even the diamond positions that you may be holding. At the moment, greed is taking over this market, okay? There is a lot of complacency, and people are starting to assume that this trend is going to at least continue indefinitely as it has done over the past 2.5 months. Sorry to throw you a curveball. An instance of somewhat reality, it generally doesn't play out this way. Generally, when we get up into these areas and when you see the ADX extended to the extent that it is after the breakout that we have seen at the midpoint of October, it makes a lot of sense to me that if we consider this to be so far about a 900-point move, in terms of a Fibonacci retracement of either 0.382, 0.5, or 0.618, a large portion of this move is going to be given back. In other words, more of a material pullback should actually stem or at least occur over the next 1 to 2 months. And this is what I'm trying to alert you to before I take a little break, a little bit of a sabbatical from the markets myself. So again, as we transition into Friday's session, personally, I will be taking off some of the trades that I have open on the markets, and I will be essentially sitting on my hands while I'm away, but also watching the market closely and waiting for the retracement to occur. I encourage you to enter into that mindset as well, to disconnect from the market, which has been just on an absolute rip, and to prepare yourself for the inevitable pullback. When this pullback comes, this is going to be your next opportunity to reposition those index plays or the indice plays that hopefully you've had exposure to, not only over the past number of months, but this extends all the way back to the beginning of 2019. You can see on my chart over here, 6,696 was the first long trade that we placed on the Qs, at least, after, of course, the Q4 2018 meltdown. So again, I'm just trying to sort of preface this, extend this out to the future before I move into some pieces of housekeeping. I'm also going to go through our top 12 individual trade list, but that will wait for the time being. As you are well aware at this point, hopefully, this is going to be the last video in this public forum for the calendar year of 2019. Again, I'm taking about 2 weeks off. However, exclamation mark, This week's upcoming pro class, it will continue as regularly scheduled. Okay, so this coming Saturday, I will be sitting down and it will be the final pro class for the year 2019. Okay, I will be back on the airwaves the day after I return from my overseas vacation. In the meantime, however, I'm going to sort of pause here. The website itself, www.pivotpoint-trading.com, the new website, the new sort of member resource area, the classes themselves, it is up online, it is operational, it is live. It actually launched on, or at least earlier today, on Thursday. But as such, for the first time, when you sign back on in, what I've done, I've culled through a bunch of inactive accounts. Hopefully yours hasn't been one of those accounts. But go in, just sort of log in as you generally would. If you have any questions whatsoever, or if you have any problems with the website, please get in contact with me sooner rather than later. You can send through an email again, success@pivotpoint-trading.com. But again, by all means, sign on up, have a look at the website. There are some free resources there. You can have a look at the scholarship classes. Otherwise, I would encourage you to have a look into the Mastery series while you have a break over the Christmas and New Year period. All right? While you have a break over the Christmas and New Year period, obviously volume is going to trickle out of this market. There aren't going to be as many active participants trading in the open markets, not generally until the second or third week of January. It's a very good opportunity to actually hone in, learn some new skills, and be ready to apply them in the 2020 year, as I do each and every weekend in that pro analysis class. I'm sort of putting it out there. If you want to take me up on that offer, have a look into it. It's very easy to navigate to. Otherwise, have a look into that Pivot Point Pro Analysis class, or be ready, all right, for the 2020 year. It's going to be a very important year. I think it's going to also come with tremendous upside potential. But before we realize that upside potential, be mindful and be prepared, be cognizant of a deeper correction, a correction which is going to probably freak out a lot of people. They're going to begin questioning the validity, the legitimacy of this bull market continuation on a macro time frame. I'm sitting here before it occurs telling you that when the intermediate pullback does set up, when it does eventuate, you're going to want to look at buying the market off from that next subsequent higher low. I think this is going to intertwine very nicely into the beginning of 2020. So again, right now, you should be thinking a little bit defensively, culling positions, taking risk off the table prior to the pullback, and then inevitably that continuation to take us above the swing high that we're most likely going to price in. If it's not in the final week of December, it's going to happen most likely in the first month of 2020. All right, that's all I'm going to preface in terms of the overall analysis. But I just wanted to say that this is the last video recording for the calendar year 2019. It's been a major blessing. I am truly honored and really grateful and privileged to actually sit down and to bring you this analysis. It makes me very happy. I'm very happy to share this analysis with you. And I hope over the past 12 months or however long you've been listening, I know people personally have been listening to this channel for 5 years plus. I hope you are still learning from this analysis. The day I stop recording these videos will be the day when everybody is up to date with the true application of technical analysis to the financial markets. I'm not sure if that day or time will ever come, but until it does, I will still sit down and bring you these week-to-week market updates and intertwine some market analysis, most likely, or continued anyway, with the top 3 market indices. The real crux of the analysis, however, is still going to happen in that pro analysis class when we're drilling into the top 12 individual trade lists. So again, I just wanted to wish you all a very happy Christmas, a very happy New Year, and I'm very excited to be coming back in 2020 to, again, continue with the work we've done, not only for this calendar year, but for many years into the past as well. Again, just to repeat myself, the new website, it is up online. Create a user account if you haven't done so already. As I said, there are a number of classes under the scholarship tab. Once you sign in, you can go through and have a look at them. Very sort of basic, but it does sort of transition into the very powerful analysis of the classes, which is called the scholarship classes as well, up on the website. If you have any questions, email me, success@pivotpoint-trading.com. In the meantime, let me just recap and round out a bunch of these individual trades, all right? Just remember, of course, the ADX signal when it gets elevated, mixed with the NASDAQ coming up somewhere between 8,900, but most likely that psychological round number of 9,000, you are going to want to be playing defensively. So this works very nicely with this little break that we're having over Christmas, New Year's into the second week of January, all right? Don't forget the ADX signal mixed with price action. That is it. That is everything in a nutshell that you need to know at this particular juncture. Now, again, that also extends to our top 12 individual trade list. Most recently, We've had a number of trades on Netflix, 281 long, 295 long. This was a little bit of a pain. It pulled back at 309.73. But here you can see, here you can see off from this extended trend line what happened most recently in entry at 303.34. We're all the way up at 332.22. So each and every one of these trades has been profitable. And now it's producing out of the continued reversal signal that we've been talking about after the false breakdown in the period of September. So this has absolutely rocketed. Have a look at this long day white Morobozu candlestick as at the close on Thursday. This is factoring in the first 4 days of trade for this week, up 33.72 points at the moment. We're coming back up to this old support as new resistance, but I still believe, as I've been talking about, that not only Netflix, but again, this extends to Amazon. It's going to slingshot towards the gap fill, which is still up here at 361.26. Okay, so if you're in this, yes, we are at the bottom of this gap resistance. It might be an opportunistic time to actually cull a portion of those positions, but from this 303.34 entry, you can start to bring up your stop on the trade and just lock in this profit. If this really gets going to really round out December, 361 is still going to be the target. Now, Microsoft, again, this has been a tremendously profitable trade from 146, even as low as 142 after earnings, but up here at 151, 152. You can see this looks like, again, some form of a bull flag continuation. We're up here printing at 155.71. Again, I'm going to write the letter D. Think defensively. Don't think about putting new positions on. I understand at the moment this market seems to be only moving in one direction, and it is. Everyone is bullish. But now is the time to be taking positions off, because when the market does peak, it's going to drop very quickly and there isn't going to be much warning about it. And a lot of these trades are going to get caught up in that inevitable drop, which is going to mark the top of that intermediate, or the beginning anyway, of that intermediate deeper correction, which is going to be another opportunity to buy, which I'll update you on in pro and here in this public forum as well. IBM, absolutely asleep, not participating in this. It might be a good opportunity again to cull that. Google is still continuing. You can look at all these past entries. The first one we placed most recently moving into earnings was down here at 1,214. We had to close this out at 1,266. Since then, we've been chopping backwards and forth, up and around this past resistance, this new support. But overall, we're just grinding and continuing to the upside. It has been a little bit of a slower week for Google. We're only up close to $10. But again, this is above most recently, the 1,345 entry as well. 1,320, 1,314. I think you get the picture. If I was you, and obviously I'm not you, but speaking on behalf of you, or trying to sort of sit down and at least for you to sort of get my thoughts on it, all of these positions over time you should be rolling out of as we move towards Christmas. It's really that simple. Disney, not really participating in this. It has more recently in the period of November, 140.42, but since then, 151, it hasn't even triggered at 149. It's down here at 146.15. I'm not concerned about this, but again, just looking for the trend continuation to take us above potentially 149.10. Overall, it has been a tremendous stock to actually trade. But as such right now, begin rolling out of positions if you haven't already thought about doing so. COP down here, 54.26, 58.14, 59.71. We hit our first target here. Since then, we've just been saying, hey, leave it alone. Give it a little bit of fluff. We don't think it's going to break above 64.51. And as such, I would just simply take this off the table completely. If you have it on in your open trade list, just get rid of it. Just forget about it. We're at resistance. Market's only got limited upside until it does potentially slow, or at least the handbrake's pulled. I would not be looking to get into COP whatsoever. Caterpillar seems to be making that of a stair-step pattern. Still hasn't broke above 149.09. We're sort of getting stuck here, and as such, we're allowing the ADX to reset on this particular stock. There is still an opportunity that we sort of gap fill or close the ag gap up to 154. But I really wouldn't be putting all my eggs in one basket when it comes to sort of that approach to Caterpillar. This market, mark my words, it is operating on borrowed time. All of these gains that we have seen over the past number of weeks, they are going to be given back. And even, plus more as well when this intermediate top comes. So I'm warning you, again, it's really hard to disconnect emotionally from the market. This is a time where you need to actually disconnect. This greed, this profit that we've seen, it's not going to continue forever. Your mindset should be buying the pullback and hoping that that pullback does move quite a distance. All right, that's the reality of this. Push those options into the future, but it's not going to happen over 1 week. It's not going to happen over 2 weeks. It's probably going to be at least a monthly sort of decline in terms of the intermediate pullback. Baidu is continuing. This is something that we've spoken about, holding the support 118, 120, 122.97. We're up here just shy of 130. We're over 128 at the moment, 128.07. This is working out quite nicely. It's somewhat similar to Netflix, right? You get the pullback and then you get the bounce. Similar sort of play that we're looking at in Baidu. This is working out quite well. Again, what do we have? An air pocket gap resistance up here at about $150 per share. So again, it makes a lot of sense to me that although we're not at our target, it could be a time to actually just cull a portion of it at a minimum and just be prepared for that drop. It's not going to happen tomorrow. Most likely it's going to play out in the month of January. But again, do as you please with my words of wisdom, if you want to call them as that. Boeing Airlines continues to drop. Still fundamental sort of weakness, at least headlines as well. I'm not going to be overly aggressive with this, all right? I'm just going to simply leave that stock alone. It's not really on our register. It's not really on our hit list at the moment. Mixing it into where we are currently in the market environment. We've got Amazon as well. I mean, this has just gone back and forth, and now it's going, well, actually it's rallying obviously, but it wouldn't surprise me if we get another pullback as well. It's been a little bit choppy, but overall we're really sort of setting up that structure, the series of higher lows and also a series of higher highs. Yes, it's very obvious that we are in some form of ascending triangle, so not an ascending triangle, an ascending channel. But at the same time, it is still relatively volatile. Today, we tried to actually close the open window between that of Monday and Tuesday. So again, I'm still very optimistic on this stock. I really am. It's just taking a little bit longer than we would have otherwise liked, all right? Very similar to Netflix, very similar to Baidu. In our approach to this share, it's also lagging, obviously, other tech companies. But there's some really nice signals here that we have seen in the past, but maybe if we get on up into this resistance, we're not actually going to go through and give back the majority of those gains as well. So simply just holding on to this. But once this moves profitable, all right, it might be a good opportunity to roll out of those positions. And the final stock very quickly is Apple. Apple, again, has been on an absolute rip, 223, 230. Yes, there was earnings, 256, 261, 265, 272. These are all profitable trades if you hold them for a longer duration. It's up at 280 at the moment. But again, I'm just sort of showing you this because if you can understand what's happening in the market itself, right? Prior to the breakout that happened in October, you can set yourself up to just hold on to a bunch of core contracts and be paid off over an extended period. Now the sentiment, the psychology, more importantly, it needs to shift. You sort of need to sever the connection between what has become day-to-day business in the markets and prepare for the first major shock that's going to hit the markets, right? That is the mindset. That is the mentality that you should be holding on to at this point, and then recognizing that with that shock, right, with the pullback is going to come another opportunity to load up, a longer-term durated options pushed into 21 that you'll be able to liquidate at higher prices depending on where we actually establish this intermediate top. Again, I believe it's going to be somewhere between 8,900 and 9,000 points. So that's going to do us at this Thursday afternoon market recap. Again, there is going to be radio silence on my side anyway, publicly. All right, so I'm going to wish you a very happy Christmas. All right, a Merry Christmas and a Happy New Year. It's been a tremendous 2019. I would encourage you to have a look into any of those resources over the new year if you want to study, if you would like to learn, if you want to, hopefully, make 2020 a very profitable year as we most likely run into what will ultimately be a market top in Q4. If not, it's going to come soon after in 2021. I cannot sit here with definitive sort of, which quarter it's going to be at this particular point, but I can say it's certainly not going to be in the first half of 2020, and it may not even actually occur in the second half of 2020. I believe it's going to occur in the year 21. So again, here we are saying farewell to 2019. Look back retrospectively and understand and realize the amount of opportunity that there has been in the market. Yes, it's been volatile. Yes, it's ebbed back and forth, but overall, it's been largely predictable. We've had our finger on the pulse of this market, and that is going to continue into 2020 as well. All right, so that's going to do me. Everybody, enjoy your holidays. Spend your time wisely with friends and family. Enjoy the festive period. Again, if you have time, rotate over, create an account, pivotpoint-trading.com, and I'll see you all in the new year. For those in Pivot Point Pro, again, I will be with you this coming Saturday before we take that 2-week break. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.